We have that rand weakening slightly yesterday, so back above that 690 level against the dollar. And that's despite some euro strength coming through. We've got the euro heading towards $1.40.
Morning, Stephen. Yes, absolutely. The rand once again failed to breach that 685 level to the downside. In our view, if it had done that, then the next level would be looking at a 675. But as you mentioned, it actually weakened yesterday. In our view, that may have been largely attributable to a pullback in the gold price, but also undoubtedly, as the rand has strengthened in recent days, there's bound to have been some increased short covering by South African importers, and that probably contributed to a bit of rand weakness yesterday.
Let's look at that euro movement. We had the ECB yesterday, President Jean-Claude Trichet indicating that the bank could raise interest rates as early as next month. And the feeling in the markets had been that it would have only happened in the second half of the year. So a bit of a shock decision.
Yes, Stephen, it certainly seemed like he was trying to prime markets for a rate increase earlier than had been expected, in fact as early as next month. He repeatedly emphasized the fact that the risks to the inflation outlook were on the upside. The European Central Bank has actually revised its inflation forecasts upwards for this year and 2012. So he repeatedly emphasized that aspect and said that it would require increased vigilance. So certainly seemed to have been prepping markets for a fairly soon rate increase.
Do you think other central banks in developed countries like the United States, like the Bank of England perhaps, might follow suit, or do you think this is a Euro-specific problem?
Well, Stephen, I think all banks, all central banks in developed countries, or the majority of them at this point, still find themselves in a bit of a bind, because growth across these regions hasn't really accelerated. In fact, if you look at the UK and US, their estimates of Q4 GDP were in fact revised downwards last week. So growth is still struggling in these key areas, and so I don't see any change in policy direction from the BOE or the Fed at this stage. But certainly inflationary pressures are starting to build globally, so it's not a situation that can be ignored indefinitely, but at this point it seems to still be a bit of a policy conundrum.
Well, all eyes really now on the non-farm payroll numbers coming out of the United States this afternoon. And ahead of those numbers, we had some pretty decent ADP private sector numbers on Wednesday, and yesterday's weekly jobless claims also a little bit better than expected.
Yes, absolutely, Stephen. So on the whole, things in the US seem to be improving, particularly on the unemployment or labor market front. As you mentioned, initial jobless claims fell. The data that was out yesterday indicated that initial jobless claims came in much lower than the market had been expecting. In addition, the Fed's Beige Book survey that was released on Wednesday indicated that employment prospects across the country certainly seem to have improved since their last survey. So all eyes are certainly on non-farm payrolls, markets penciling an increase of 200K for the month, and that's up from, that would certainly be up significantly on January's 36K. But nevertheless, the markets are still bracing themselves for a slight uptick in the unemployment rate from 9% in January to 9.1% last month in February.
Implications for the currency markets of those numbers this afternoon? If those numbers are worse than expected, would we see the dollar weakening or strengthening?
We definitely see the dollar weakening, Stephen, depending on the severity of the undershooting of the data. And in that case, we would then be expecting to see quite a bit of rand strength on the back of that dollar weakness then. So that would be the main risk event today for currency markets and for the rand in particular.